Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin. We're just going to be continuing to follow the move that we've been in for the last few months. Clearly, we've been maintaining this bullish momentum on the weekly time frame, which is, it's a lot more important than those hourly time frames that many people like to watch. So, if you guys like the channel, you guys like the content, like the data science approach that we normally take, I mean, this is a TradingView video, but a lot of the videos we do are not TradingView, then please subscribe to the channel. We're about to hit 20,000 people. Hopefully we don't retrace back down to 3,100 like Bitcoin, but again, let's show Bitcoin how it's done and push through that 20,000 milestone. If you want to talk about this stuff, then check out the Telegram group in the description below. And if you want to get access to the premium list and see more of the data science models and whatnot, then check out my website, intothecryptoverse.com. So let's go ahead and jump in. We've talked extensively. We've been publishing videos for a long time now. We're about to come up on a year in a couple weeks, so that's exciting. But we've been following it, fairly extensively, even since we had this wick down here at the 300-week moving average, and we've been slowly moving up. We were at the 200-week. We had a weekly candle at the 200-week. I'm not showing the 200-week on here, but when we were at the 200-week, we said, all right, we're going up. It looks like our next stop will be the 100-week. And we made that, and we kept going, and we said, all right, the next stop is the 20. And then after that, the next stop is the 50. And despite all of these milestones, Bitcoin has continued just churning along, moving up this path, despite all the bears saying that it has to retrace back down to 1,800 or 3,500 or whatever it may be. Now, again, this is something that has to accompany the start of a bull run. There's a few things that are just quantitative that you can look at and say, all right, what do we need? We need to be above the 20-week moving average, as we've shown in many prior videos. Because the 20-week moving average, the blue line, is our historic support in a bull market. We also want to see a golden cross, which we saw not too long ago, which is just the 50 and the let me go ahead and change this back to the 200. But basically, it's just a cross from the 50 to the 200 to the upside. So you can see that we recently had that about a week ago or so. So the 50-day moving average was 8,300 now. The 200-day moving average is around 8,000. And we even mentioned many times that when you have a golden cross in the short term, you will sometimes see these moves down. But if it's a true golden cross and it really is signifying the beginning of a bull market, then the overall trend should stay intact. Now, it is obviously too soon to identify whether the bull market has started or not. We've said before that what we need to do is we need to go back down to the 20-week moving average and test it as support and hold it as support for a long time. At present day, the 20-week moving average is around $8,200 or so. We have to test it at some point, and I don't know if we're going to test it at 82. We might test it at 9,400 in 3 months. It's really hard to say how far above the 20-week we might go, or it's always possible that this is as high up we're going to go, and we're going to just come down to the 20-week in a few days and test it then. So we're not sure yet what's going to happen. The 50-week seems to be holding a decent level of support at the time of this video. I get a lot of people asking, well, if you see the price go below it by a few dollars, does that mean we broke it? No, I mean, again, it really is exchange dependent, and it can vary quite significantly from exchange to exchange. If you just take a few minutes and go look at how easily these moving averages are different across various exchanges, because the prices on those exchanges can be different from one another. So we're going to be looking at the 50-week. We want to hold this as support. If we hold it as support, then I think other coins, again, like Ethereum, it's going to be their time to shine. But until we hold it, we can't really say one way or another. So we need to hold this level. The 50-week is currently closing in at around $8,800. So, we went down to 8,800. We even flirted a little bit with 87. Maybe some exchanges we got down to 86. But again, we see the weekly candle has now started moving up from that moving average. So if we can print weekly candles above the 50-week, then I think this is going to provide more confidence for the bulls in the short term. We often say on this channel, we don't know, we can't predict short-term moves. Like, if you see people posting off their Twitter, whatever it might be, a lot of them are just deleting the posts that don't turn out. And if they're also posting their highly leveraged trades, a lot of times, they'll just open up a long and a short, and whichever one wins out, they'll post that one. So it seems like they're always making the correct move, when in fact they're not. So again, it doesn't matter what Bitcoin does in the short term, it's highly irrelevant. What's relevant is how you react to it. And if your reaction is emotional and not based on numbers or models or anything that's concrete, then cryptocurrency is likely going to chew you up and spit you out. But if you can base it on something that's concrete and something that you've been studying for a while now, then I think you'll have an edge up because you know how to react no matter what happens. For instance, if we drop down to the 20-week, you'll know that this is a critical region of that we need to hold for the bull market to stay in full support. Like if we can hold the 20-week moving average, then a lot of other coins are also likely going to continue to do well. If we drop below it, we're kicking the can down the road 3 to 6 months. We're gonna likely the risk levels are probably going to go south of 0.3 or something. And it's going to be, continued time for accumulation for hopefully the inevitable bull market at some point. Now, when it occurs, the bull market could have already started. We might look back in 4 years and say, oh, yeah, this was the time we got above the 20-week and held it more or less as support for the next several years. Like hindsight's 2020. We don't know if this is going to be the time or not. But what we do know is that we have necessary but not sufficient conditions. So one necessary condition, again, we got to be above the 20-week moving average. Another one, we need to print a golden cross. A third one, which again is not very tangible, it's not quantitative, but you have to have, tons of bears and people basically shorting the market and thinking that, okay, we have to head back down. Because this helps fuel the rally. And also the people that aren't even shorting the market, the ones that are just sitting on the sidelines, biding their time, waiting for an $1,800 Bitcoin, at some point they're going to realize, oh, okay, yeah, I missed the boat, and now it's the price is 3 or 4 times higher than what it was back in March, and I suppose I should jump on this train before it takes off. So these are again necessary, but not necessarily sufficient conditions for a bull market. And what do we need? Ultimately, we need time. The longer amount of time we spend up here, and especially if we come back down to that 20-week and we just hold it as support, this is what's going to provide evidence for the bull market. Right now, we have no evidence. We're just saying, okay, we've checked off some conditions that we need to meet. But ultimately speaking, we're going to have to go through the hard times of spending weeks, months, testing the 20-week moving average to provide validity to the fact that the bull market is starting, and also to provide validity or confidence into other coins, such as say like Ethereum, where it remains highly speculative on say whatever the price of Bitcoin is doing. So keep this in mind. I will remind you that if you want access to say the risk metric, access to these other types of analysis that we do on Bitcoin, such as looking at what the best hour of the day to buy Bitcoin is, statistically speaking, as well as looking at what the best day of the week to buy Bitcoin, statistically speaking, as well as several other special topics we look at week to week in the premium newsletter, then I would encourage you to check out my premium list at intothecryptoverse.com. It's quantitative market analysis designed to give you an edge. We don't, we completely take emotion out of the picture. We look at numbers. We look at, the risk model. We look at logarithmic regression. We look at under and over valuation. And every single week in the report that I put out, we have a special topic where we look at something that you can kind of just add to your arsenal in a sense of your toolkit of how you manage your cryptocurrency portfolio. Again, this is not financial advice. We're just looking at markets. My background is a PhD in engineering, so I try to use this skill set into something like cryptocurrency, which I find fascinating, so that it can be helpful to others and that other people can use these models to better follow cryptocurrency and be better prepared for whatever happens. So you don't, you stop becoming scared of movements. If price goes down, it allows you to get your weighted risk on a coin lower if you purchase more by dynamically dollar cost averaging. That's something, it's something that you can look forward to happening when the price goes down in the short term, because ultimately speaking, again, on this channel, we focus on lengthening cycle theory. The data suggests that the next peak at 100K is not in 2020 or 2021, like a lot of people will tell you. Likely not even 2022, and if it is in 2022, it'd probably be at the very end of 2022 at the earliest. I think likely 2023. It could even be as far out as 2024. And I'll take this moment to talk about that. If one of the most common things I get is, okay, Ben, how in the world could we have a bear market going into a halving? Does it make sense? It's never happened before. Well, first of all, forget what you think you know. Just because the cycles have happened to line up like that so far does not mean anything about what they're going to do in the future. And if you look at what has been going on, if you actually look at the data, it suggests that the peak is getting closer, the peak of the speculative bubble each market cycle is getting closer and closer to the next halving. So at some point, right, the peak, assuming lengthening cycle theory is true, is going to be getting very close to the next halving, as opposed to being close to the halving that ultimately catalyzed that bull market in the first place. So the interesting thing about this is it's twofold. So one is, well, what happens if we see a peak and then we have the halving 2 months later? Oh, well, is that going to continue the bull market? No, not necessarily. We've shown that we're going to see diminishing ROI on the macro scale, and we know that is going to happen, or at least we suspect it's going to happen based off what the data tells us. So and that works both ways. It not only works in moving up, but it works in moving down. So maybe, think about this for a minute, maybe instead of the next 2024, I'm convinced that the 2024 halving will not be, say, like, it's not going to be, I highly doubt it's going to be at the catalyst for, say, another bull market after, say, the present one that might occur until then. But think about this for a minute. Imagine we go up, and it's around 2024, 2023, we have a peak, and then we start to retrace. The next halving, again, could just act as something to soften the blow, if you will, of the next bear market, so that the losses aren't quite as great. Maybe we only have a 60 or 70% retracement, and the next halving helps with that. And then maybe the next halving after that, whether it's, say, like 2027 halving or 2028, I think it probably would occur in 2027 since they're becoming earlier and earlier each year. Then maybe, say, like the 2027 halving would then help catalyze another bull market that might take place over 4 or 5 years and ultimately peak out in 2032. And this would mean that the next bull market could have 2 halvings in it. Maybe the first halving is what kind of helps bring the confidence back to slowly start moving up, but then the second halving is what leads to the next speculative bubble. And even that scenario could be the case in this current market cycle if the next peak is, say, in 2024. Maybe the next halving will be right before the next peak. So again, if you stick to what everyone in cryptocurrency says, and that is, there's so many people that say, okay, it has to be a 4-year cycle. Again, forget what you think you know about what has to happen, because the only evidence, quote unquote evidence, for a 4-year cycle is just from 2013 to 2017. We had a down year, so 2013 was up, 2014 was down, 2015 was sideways, 2016 was up, and then 2017 was parabolic. That's it. That's one cycle. Okay, that was one cycle. And likely the cycle before it was just, say, 2.5 years. The next cycle was 4 years. Maybe this cycle will be 6 or 7 years. This seems to make more sense to me, because if you imagine moving up on that logarithmic scale, to move up, so this is my other website, intothecryptocharts.com. So to continue moving up on this scale, it's going to take a lot more people coming in, despite the fact that we're not moving up as much. We have to get a ton of volume into the market. And you can see again that our fair valuation, which is likely we're going to get to our, in the last back in the last market cycle, we got to our previous all-time high of around $1,100 within the primary regression band. Okay? And if we repeat that, then to get to a sustainable $20,000 Bitcoin, it's going to take until the end of 2021 or say the beginning of 2022. So these are things you need to take in consideration. Of course, we might hit $20,000 sooner. Obviously, most people did not expect $14,000 Bitcoin in 2019, but in order to get to a sustainable 20,000, I think it's going to take another 18 months or so. So again, with Bitcoin in the short term, we know what happens is irrelevant in the short term. What matters is how you react to it. And you're either going to be emotionally invested and potentially be the person capitulating on candles like this, or you're going to look at the models and say, okay, if we see something like this, I'm going to be ready for it. I have the money on the sideline to take advantage of that move, so that my overall buy-in price is lower and my risk is lower on that purchase price. And if we continue moving up and we start to go parabolic in the short term, which, I mean, maybe we do something similar to 2019. Maybe we go back up to 13, 14K over the summer, and then we retrace them again. I mean, you have to be ready for these things. And if that happens, how are you going to react to it? Are you going to FOMO into the market and then just throw tons of money into the market because you think Bitcoin has to continue going up? Or are you going to stick to a methodical approach that ensures over the long term, if you just follow it, that your risk on your purchases stays low and that you're taking profits when the risk and price go up? So I hope you guys enjoyed the video. Remember to subscribe. Let's shoot for 20,000 subscribers. If you want to join the premium list with a weekly report, a weekly premium video, and access to a Google Sheets document that's kind of like a dashboard for following the risk metric live, as well as a few other things, then check out my premium list at intothecryptoverse.com. And if you just want to discuss the stuff, we do have a public Telegram channel that you can find in the description below. Thanks for tuning in. We'll continue to follow this. If you see us come back down, the 20-week is our next area of support. If you see us move up from here, then breaking that 10,000, 10,005 area would be certainly bullish in the short term and could lead to another shorter term, smaller speculative bubble. So thanks for tuning in, and I'll see you guys next time. Bye.